I don't know. Did you expect to see a gain of 4 or 5% here on the NASDAQ and a lot of double-digit percentage gains for individual stocks?
I think very few people did. You know, in hindsight, you can go back and find some sort of narrative to explain what happened, and that's always very good. And I think we've heard a lot of that today. Explaining, I didn't hear that many people forecasting this and saying if there's a split Senate that we're going to see these tech stocks take off really aggressively. So no, I didn't really expect this. I thought in a situation where we saw this kind of contested or sort of a hung election where we're not really sure who's going to be president, and what direction that's going to go in, that the markets would suffer and would see increased volatility. As it turned out, exactly the opposite has happened. But doesn't that keep our job more interesting than just being very predictable?
Yeah, it really is. I mean, we spent so much of the time saying, buy the dips, buy the dips. I mean, I don't give advice, but our experts like yourself do. And many of them were saying, look, if we get a lot of big volatility and we see a sell-off, buy the dips, because in the years to come will be higher than the current level. That's not to say that there may not be some dips, right? Just because today's a great day and yesterday saw a lot of up arrows, what now? Maybe the next 5-10 days could be very volatile.
I think you're absolutely right. Now, what really depends, everything depends on is what happens now with the presidential election. The Trump campaign is making noises about contesting things, going to the Supreme Court. I think it's very likely that we see that. And so we're going to go through some unpleasantness there, I think, and there is a risk there'll be some unrest around that. So I don't think we're out of the woods at all on this front. And I think this really looks sort of like an eerily calm, almost bizarrely positive market when the news out there really is kind of negative at best. So I think the balance of the risks points towards some more volatilities and some downside. This is almost too good to be true. And my experience is when something's too good to be true, it usually is too good to be true. And that's, I think, what the markets are doing right now.
Right. So what's your takeaway? What do you advise to folks at this point? Because there's still a lot of uncertainty. And does your advice break down into a short term and a longer term?
I think at this stage, the best thing to do is really, I'm not in the business of giving individual stock advice and doing things of that sort, but I think the best thing to do is basically just sort of sit tight on your portfolios as they are at the moment. The tech play, I think, has played itself out. I don't think you can jump onto that bandwagon. That is not going to have more legs and increase even further than it has already. So I think the best thing to do is basically be very cautious and vigilant this day, sort of sit on your hands a bit and look at what happens over the course of the next few days. And then if we do see something looking more like turmoil, go into sort of safe assets like gold and things of that sort. But it all depends on how things unfold. It's so hard to say. So I think for the time being, sort of sit cautiously on the sidelines and just watch and see what happens. And that's the best advice one can give in this kind of environment, is basically do nothing.
Yeah. I see. Yeah, I mean, it's fair. And we have seen an incredible run up with technology. So I can see why maybe you're a little apprehensive about the group. I mean, I think that's a fair way to say it. Would there be other groups that maybe would be of interest to you in the new year?
Well, I think it's going to be really interesting to see what happens with the financial services stocks. Usually they've benefited tremendously over the course of this past few quarters, particularly stocks like Morgan Stanley and Goldman Sachs have fared very well as a result of market volatility. That has died down somewhat a bit now. So I think the conventional wisdom would say that with increased volatility that we might well see going into this election, and as this election unwinds, that those stocks will benefit. So those are the firms I'd be watching out. And there's, of course, the whole question of COVID lockdowns and what happens in that situation and which stocks benefit from that. And I think there's a fairly obvious set of stocks that are poised to benefit from that. I think some of the things that people don't look at really in terms of the so-called lockdown stocks are things like electronic arts and video games and things of that sort. They've done very, very well. Every time we've had a lockdown, people seem to spend hours in front of video games and spend more money on that. So those are the kinds of things that might see do very well again as if we see further lockdowns.
You know what I thought was interesting? Just as you were speaking, I saw Carnival Cruise flash along the bottom, Octavio, and there are certain names that have just been beaten down. And that would include cruise lines, airlines, some of the hotels and casino names. Is that something that you would put a little money in, any of those groups, saying that in 3, 4, 5 years they might be better, or you just you wouldn't catch the falling knife and stay away from those groups because who knows when they get better?
Yeah, I mean, I think you're definitely looking at trying to catch a falling knife there. You know, you might put a bit of money into it and say that's sort of a lottery ticket, in the sense that if it does well, then I stand to have very substantial returns on that. But on the downside, those stocks could easily go to zero. So if things carry on going the way they have been for stocks like that, they will go bankrupt, and the equity in those companies will be wiped out. So I would say that's a brave bet to take, but I wouldn't really recommend that, no.
Right. I think lotto ticket, I understand where you're coming from, because there's no real sure thing at all for this group, and hopefully they do return. How about things that have been doing well, the opposite, such as housing and auto sales? I mean, people have been buying homes. We're seeing materials. You're seeing home improvement retailers, home builders, all things related to the home, furniture, Wayfair and Lovesac. And then autos, even used automobiles and pickup trucks. And they're very hard to find. Anything has to do with autos has been doing well because everybody's getting these homes, and now they need one car or two.
Indeed. So, you know, second-hand cars have done particularly well, and that would be a very difficult thing to predict as well. So as people have moved outside of big urban areas into the suburbs, they said, well, I need a second car now, and I'm going to get a second-hand one. So second-hand cars have done particularly well, but cars overall have done very well. Home improvement has done incredibly well as people move, but also people have more disposable income available, because there's a whole segment of entertainment, of restaurants and things like that have basically just disappeared. And for many people, those items take up a large part of their budget, at least a large part of their disposable income, that they simply can't spend. So they've had more money available to spend on other things, and so they've been remodeling their kitchens and buying second-hand cars and things of that sort. So some sectors have done well, and unfortunately others have done quite badly, and that seems set to continue for the foreseeable future.
I just have a few seconds left. and I think it's important to ask you this, and that is, would you sell? Would you sell some of your tech stocks now and take some profit? Maybe not all of them, some. Would you take some money off the table right here?
I'd be very, very tempted to do that. I think this looks like a high. Even if it goes further, it might be nice to sort of bank some profits there and basically take that off the table. So I think it's a great question. I think you're absolutely right. It seems like a good time to take money out of tech.